Welcome to Simplify Stacey YouTube channel. In today's video, I will discuss about one of the core important topic of Stacey Burke trading, which is the peak formation. I saw most of the trader identify this peak formation in wrong way. I don't know they can use it in proper way or not, but I need to make sure that in my community they use this peak formation properly. So this is where the idea comes to make a video about the peak formation. It will help you a lot if you can add this topic into your trading. So it will help you to identify the market direction, also to identify the setup according to your weekly template. So here you can see a peak formation PDF. If you need this PDF, you can simply drop a message me on the Telegram, here the simplify_Stacey. Make sure you correctly type this username to contact with me, so that I can send you the resources link, joining link to the channel, so that you can get all of those PDF to read more. So today, as we will discuss about one of the topic, which is the peak formation. So first of all, we need to know what is a peak formation. Peak formation is simply A top or B bottom. This is what we call peak formation. Now there are two types of peak formation you can identify. This is what we call peak formation high, and this is what we call peak formation low. So I see that most of the people identify this peak formation high and peak formation low in wrong way. So I will try to explain this peak formation high and peak formation low in a very simple way, so that you can efficiently use this in your trading. So right now, before you understand the peak formation high and peak formation low, you need to understand another things, which is a failed breakout. Previously I discussed about a failed breakout, how you can identify, but it was in a session how you can identify. Let's say, for example, this is our CP closing price. On the above we have a yesterday high, and below we have a yesterday low. So I said that once it's triggered one of those high and low, this is a candle breakout. So once this breakout candle, a downward candle, close below that low, that means this breakout right now failed. This failed breakout is for our session opportunity. If your setup is valid for a reversal opportunity, then you may use this to identify your trade setups, or you may use this for enter the market properly, or you can use this breakout and failed, this is session breakout and failed, for a continuation trade setup also. But there is another way to understand, is the breakout is failed or not, and for identify this breakout is failed or not, we need to wait until the end of the day, closing end of the day. So how you identify that it's a failed breakout? Let's say, for example, market goes up, then end of the day it reverse and close below the CP area, or below the yesterday high area. That means the breakout right now failed. Once it's closed below end of the day, you need to make sure that it closes below the CP or below the yesterday low, and it should be on end of the day. Same for the downward. It's breakout to the downward, then end of the day it close above the CP or above the yesterday low area. That means the breakout right now become failed. This is how you can identify the failed breakout on daily basis. But if you want to identify the breakout and failed breakout concept on 15-minute time frame or 1 hour time frame, most of the time people use on 15-minute time frame, this is for the session opportunity. It doesn't guarantee you that this failed breakout on the yesterday high, yesterday low, it doesn't guarantee you that end of the day it still remains in closing breakout. It's a session opportunity. Again, I repeat, it's a session opportunity. But once you identify a failed breakout, a perfect failed breakout, that should be triggered the yesterday high and close below the low in the end of the day. That means the breakout, now this breakout become failed once it's closed below that low. So these things we will use to identify a peak formation. Once it's triggered the yesterday high, then end of the day close below the CP or below the yesterday high. That means this one is right now we got our peak formation high. So this is our peak formation high. You can identify. Let's say for example, let me draw some more peak formation high or peak formation low. Let's say for example, price goes up, it's triggered the yesterday high somewhere on that area, then it goes down and goes below that area. That means this one is actually our peak formation high. Right now, let's say for example, price is continuously going downward, then again something like that. Then this one is actually our yesterday low, and next day what is actually happened, again it's break out the yesterday low and end of the day it close somewhere like this. That means this one is actually right now our another peak formation low. So this is a peak formation high and this is a peak formation low. This is the perspective of Stacey Burke trading. If you are coming from a PTMM breakdown, then the peak formation high, peak formation low is different. On the BTMM, they use the peak formation something like that, M formation, then a level 1 drop, level 2 drop, level 3 drop, then a peak formation low. This is represent in with the market maker strategy, but this one we are not using in our Stacey Burke trading. Okay, so this one is the actual peak formation high or peak formation low that used in Stacey Burke trading. So now the next question is, I am identifying the peak formation high and peak formation low. Right now, how do I use it on my chart? So you can, once you identify a peak formation high, our main concept is don't trade against a peak formation high. Peak formation high simply means price right now it's ready to go downward. It's a false break reversal, which is breakout becomes right now a failed. That means market is ready to go downward. So we don't trade against a peak formation high. The same concept used for the peak formation low. It means market triggered the yesterday low and close above the CP or above the yesterday low. That means this is a peak formation low. We don't trade against a peak formation low once we get it. Now some of the trader make mistake. They wait for price. Let me remove everything. Let's say for example, this is a peak formation high, goes down. This is a peak formation low, and what's make difference some of the traders, which is they wait for price back to this peak formation low, then continues goes up. This is absolutely a wrong way. You don't need to wait for back to the peak formation low area, or you don't need to wait to back to the peak formation high area to goes downward. Once you get the peak formation high, peak formation low, that means you don't trade against this peak formation low. Means you don't trade a sell opportunity. Most of the time you are looking for the buy opportunity. You don't need to wait for the pullback. Once the setup is there, you can looking for a buy opportunity on your session window. This is the peak formation low and peak formation high, you can use it. Now sometimes the peak formation high, peak formation low can be overlap. So most of the trader being confused about the peak formation high, peak formation low when it's overlap. So they're confusing it that when they use the right peak formation, is it the right peak formation high? Which one should I use? This one a peak formation low, this one is a peak formation high. So which one should I consider? You need to consider the latest one. This is the peak formation low, so this is the latest one. Another way you can filter out which peak formation you should use, which is using the weekly template. So how you can use the weekly template to refine your or filter out your week filter out your what we call the level. This is what we called overlapping level. Okay, so let's say for example this is our Monday. It's just a demonstrate of the market how it actually looks like. It doesn't mean every time it should looks like this. This is the concept that how it can be looks like. So next day it's triggered the yesterday high, Monday's high, then close below the open or below the CP area. That means this is our peak formation high. Peak formation high. Right now we may trade, we don't trade against this peak formation high. We may looking for the sell opportunity. Right now let's say for example I am just right now talking about the exception of this peak formation high or peak formation low. Okay, so right now maybe on the next day it's triggered the yesterday low and close back above the CP area. That means this one is actually our new peak formation low, and this one is a peak formation high. Right now you are become confused then which one you should use. I said the latest one you should use, this one. But another way you can identify which one you should use the as a peak formation, because this is a peak formation low, this is a peak formation high within the same area. This is looks like a overlapping peak formation high or peak formation low. So you need to filter out some things which direction you should trade. So you can, I said that to filter out the overlapping problem, you can use the latest peak formation low, you don't trade against it, or you can see what kind of template is forming on the weekly time frame. On the weekly template, what kind of template? You can see that this is a goes up, try to retest the CP, then back to the and again continuation to the upward. That means this is one type of weekly template we can combine with a peak formation low or peak formation high. That's how you can overcome from the overlapping peak formation high and peak formation low. But if it didn't give you any kind of peak formation lows in this area, it continuously goes downward and something like that, then you should not trade against this peak formation high. Okay, you should looking for the sell opportunity. Now the sell opportunity, how it should come in your session window is depend on the timings. Maybe it goes a two levels or two session goes up, then in one session it continues goes downward, or may it trigger the yesterday high, then it goes downward to the yesterday low, or may it may go on the high of the day, trigger the high of the day, then goes downward. Those kind of setup you can looking for once you get the peak formation high. And right now let me go on chart and show you some of the example about this peak formation high and peak formation low, how you can use this. So right now let me go on Nasdaq. Here you can see on the Nasdaq, this is a daily CP, maybe on somewhere on that area, and here you can see it's open, goes up, triggered the yesterday high. This is the yesterday high. It's triggered the yesterday high, and end of the day it closed below the CP or below the yesterday high area. That means this is our peak formation high. Right now we don't trade against this peak formation high. Okay, so we don't trade against this peak formation high. We are looking for the sell opportunity. Here you can see a false break reversal, also a confirmation. This is a peak formation low. Right now we're looking for the sell opportunity. Now it can be a session trade setups, it can be a long-term trade setups, but most of the trader, what they do, they wait for retest the peak formation high and goes downward. If you are in same kind of trader, then I will tell you that you definitely lost the movement. You cannot catch the movement in right way. So once we get the peak formation high, sometimes it may go, but sometimes, most of the time, not goes, because this is a peak formation where the false break reversal, also the breakout become failed and create a trap, something like that on that area. That is why it goes downward, straight goes downward from a peak formation. So that's how you can identify. Don't trade against this peak formation high. Then again you need to wait for create another peak formation low. So it goes downward, but it's a pressure of downward opportunity. Right now here I said that once you become confused about a peak formation high or peak formation low overlapping, this is a, sometimes may you think about this is a peak formation low, because it's triggered the yesterday low and end of the day something closer, something like that. This is actually not a peak formation low, because it goes up but end of the day it's close below that area. It's somewhere on the CP area or CP area. So I don't think about this is a peak formation low. If next day it goes up and close somewhere in that area, something like that, let me draw it. On the next day it's something like that, then I will consider this one as a peak formation low, but this one is not a peak formation low. So what we're looking for, we're looking for the sale opportunity. So let's see where this one is a peak formation. This is a try to create a peak formation low and trigger the yesterday low, and end of the day it closed above that area. This is a one of a variation above the yesterday low area, then it will be a peak formation low, but it's not confirmed on this day. So today it didn't trigger any of the yesterday low, but end of the day if it closed below that area, above that area, then I will be considered this one as a peak formation low. But this is one kind of variation. This is what I call, this is one kind of variation. Let me show you the straightforward peak formation high and peak formation low so that you can understand. This is a failed breakout. This is the confusion thing, that the overlapping peak formation high and peak formation low. Right, let me show you. Let me zoom in. So here you can see this is the CP, same CP, same area, also the yesterday high. So end of the day closing on that area, that means this one is a peak formation high. And what is actually happened is try to break and we get a next day on a sell opportunity. So in this day it goes up and create a, if it's triggered the yesterday low and close above, then this day will be a very high accurate peak formation low, but this is a variation also. Next day is close above the this area, above the yesterday low or the CP area. So this is also a variation considered as a peak formation low. Right now here you can see a peak formation high and peak formation low, peak formation low. So peak formation low. So I said that which one you should use, this one you should use the latest one. Also you can see a weekly template. It's consolidating, goes downward, then goes upward. So something like that, it goes downward and continuously goes upward. 2 days of consolidation or 3 days of consolidation, then retest back and goes upward. So this is a valid peak formation low. This is how you can use the valid peak formation low, also combined with a weekly template. Right now let me go some of the example, more example. This one, peak formation high. Next day we looking for sell opportunity. May we get a sell opportunity. then what is actually happen is goes above the CP area. So this is a peak formation high, and this is the CP, or this is the yesterday low, so it's close above the yesterday low. So this is actually our peak formation low. So we don't trade against this peak formation low until we get another peak formation high somewhere in that area. This is the peak formation high, and this is the peak formation low. We're looking for buy opportunity. So you need to combine it with the CP area on the weekly template, also on the daily template. So let me go some of more example about the about this template, or about this peak formation high, peak formation low. Here you can see it's triggered the yesterday high, close below the breakout, close below the CP or below the yesterday low. That means the breakout failed breakout. This is the confirmed failed breakout. Why this happened? This is a failed confirmed failed breakout. That means this is a peak formation high. Then we continuously goes downward, then what is actually happening? It goes downward, and next day it's close below. It's actually peak formation, not a peak formation low. We need to wait for a peak formation low, because it's actually create something like that, but it didn't close above that area. It's close above that area, that should be a peak formation low, but still we're looking for a sell opportunity, because it didn't trigger any peak formation, any create any yesterday low, or triggered any peak formation high, didn't trigger it. So still we're looking for the sale opportunity. There is no failed breakout, so still we're looking for the sale opportunity. Okay, so we didn't see any kind of peak formation low until this one breakout, close below, then next day it goes up. That means this is a peak formation low, confirm. This is a peak formation low. This is a variation, one of the variation. So once we get this peak formation low, we right now may looking for the buy opportunity. There's a peak formation high again, sell opportunity, then close back and close above inside. There's a peak formation low, we're looking for buy opportunity. So you need to use the peak formation high, peak formation low in the correct way according to your weekly template. This is very powerful concept of peak formation. So here you can see a peak formation failed breakout, close below, a peak formation high. We're looking for sell opportunity until we get another peak formation. Okay, so that's how you can identify a peak formation high and peak formation low. This is a peak formation high, close breakout, then failed, peak formation high, then a sell opportunity. This is a variation. First you try to understand the straight cut way. Once you understand the failed breakout in straight cut way, then you may identify the peak formation high and peak formation low as a variation, some of the variation. I will discuss another video, some of the variation. This is a peak formation high, this is a peak formation low. Okay, this is a peak formation high, peak formation low. Right now what kind of trade setup you are looking for? This is a one kind of, this is our CP, and it goes below that. That means we are looking for maybe somewhere on that area retestment, then goes downward, or a buy opportunity. So you need to make which one you should use. So here you can see it's give a, this one is valid because of our weekly template, retest and goes downward, retest and goes downward. And here you can see another peak formation high, this area, another peak formation high, this area, another peak formation high. It's triggered the yesterday high and close below. So there is a lots of peak formation high above. And also our weekly template, this is our weekly template, type of weekly template. There are three types of weekly template. This is the second one, retest the CP, continuously goes downward. So this kind of trade setup you need to looking for once you become confusing in overlapping. So that's how you can overcome from this. So I hope you understand the peak formation high and peak formation low. Everything is you can find out in this PDF also. If you need this PDF, you can simply message me on here. Also we have planning to do some of Zoom meetings in Telegram, so you can join the Telegram channel also. and some of more concept may I will introduce to you, which is actually you don't know how to use it properly in future videos. So I hope you can understand this concept, and I will see you in another concept of Stacey Burke in future. So just understand the concept and try to find out which one is valid and how you can emphasize or how you can adopt these things in your tradings. Okay, so thank you for watching. See you in the next video.